Hi everyone, welcome to another extremely interesting episode of the Fisdom Wealthcast. And I am personally super stoked. Today with us, we have an extremely interesting guest. We have Darshan Bathija, who is the co-founder and CEO of Vauld. So Darshan, a very warm welcome to the Fisdom Wealthcast. It's a pleasure having you here. I'm super excited.
Thanks for having me. I'm really excited too.
So Darshan, right before we start, congratulations on your latest round of funding from Valor. I am extremely excited for what the future has in store for Vault. So right off the bat, congratulations for all the good things that you guys have been doing at Vault, and more power to you guys.
Thanks so much.
So, Darshan, without any further ado, all right, today I sort of named the episode as Decrypting the Cryptos. But before we get into decrypting the cryptos, I wanted to understand more about why did you start off with cryptos, or rather, what is the reason behind, or what is the story behind the inception of Vault? What was not working right that led you to giving birth to Vault?
Yeah, thanks so much for the very warm introduction. It's great to be here. Um, with regards to the financial world, I got into finance at the ripe age of 22, and took me about 2.5 years to break in, given my engineering background. But took me about 6 months to get out because it was very evident to me that the incentive system and the way the incumbents operate is fundamentally broken. Capital, in my perspective, can be a significant driver of positive change, and that was not what I was seeing at the upper echelons of the financial world. So I knew I wanted to be part of a wave of disruption in the way money and finance works. I just didn't know what it would look like. So stepped away from that role. Joined an early stage company as their head of partnerships and growth, all the while closely monitoring where disruption in finance is really happening, and started reading about money from a more fundamental perspective and not from not from a short-term overview. And what I noticed and what I came to learn was inflation and the way capital is really controlled in today's world is contrary to what most people think. Our rupees or even dollars for that matter is not really backed by anything except trust in the existing system, and that trust from time and time gets abused, and the people who end up suffering are people who are holding on to that currency. A classic example, which is the far end of this, is what happens to countries like Venezuela, Zimbabwe, and Argentina. But it doesn't really have to be that extreme. Even countries as established and as developed as Turkey, Indonesia, pockets of Southeast Asia, India, roughly 25 years ago, have gone through inflation rates of above 15% on an annualized basis, which is like it's just such a large amount. And we see it as an indirect way of wealth tax if you're holding onto the capital, and which also means that it's zero sum in the way that is accrued. So we when I found what Bitcoin was trying to do, of course, introduced like most people through some friends or family who bought into it and initially speculated on it, but did some research. When I found what Bitcoin was trying to do, I knew that it was a perfect challenger to everything that the monetary and fiscal systems that are built today. It is truly decentralized. It's controlled by code. It's not interferable. It's a store of value that has laws defined right now and until the end of time, as long as the decentralized network works. That was very appealing. And a classic example, alternatively, of how banking, not just the way money works, but also banking is a problem, is when we've somehow accepted that the upside can be privatized. That is, if let's say banks do well, they get to keep the upside in the form of shareholder value or their stocks going up. And in case they don't do well, they get a bailout from the bank. Now, that clearly tells me that the incentives have completely shifted from risk based controls to take as much risk as you can, because what's the downside? the government's going to bail you out, right? Um, Classic example, in the last maybe 18 months, two banks in India have gotten to a point where they didn't allow withdrawals. It's your money. It's technically an IOU, but it's still your lifetime of savings that you've probably kept in the banking world. And if you don't have access to it, or and somebody else can tell you what you can and can't do with your money, that doesn't really sit well. I mean, we live in the 21st century. We've figured out most things, right? Tech has been a solution to most of the world's problems historically. We've seen tremendous innovation, but very little on the monetary side over the last 100 years. I don't consider net banking to be an innovation. I mean, banks doing it out of force than them trying to stay ahead of the curve. And money in the form of crypto is truly a zero to one. It's redefining how everything works, and it's extremely empowering to the people. So that's what drew me into it, to be completely honest.
What a story, what a story. So I'm quite excited to see the next leg of monetary system in the world per se. I'm not quite sure who is going to be driving it, or what technology or what currency will be driving it, but I completely understand where you're coming from, that there is a need to go from 0 to 1 when it comes to monetary systems. So as long as we're talking about cryptocurrencies, for the sake of my viewers and common Indian men and women like me, I have to ask this question right up front. Can Indians legally transact in cryptocurrencies? Is cryptocurrency legal or illegal? What's the deal?
Cryptocurrencies have always been legal from the creation in 2009 up until today. There was not one day in India where it was illegal. There was a banking ban, which the RBI enforced banks to cut off crypto platforms from the banking world. That did not make cryptocurrencies illegal. Thankfully, we live in a democracy, and the beauty of a democracy is the people get to choose what's in their best interests or no. And we have a phenomenal judicial system. So the Supreme Court found the banking ban to be unconstitutional, and that's why they lifted it. But just so I'm making myself very, very clear, cryptocurrency is unregulated. That does not make it legal or illegal. Just because something is not regulated, uh, that's an independent variable to whether it's legal or not. It's legal from day one, and unless it's explicitly illegal, it's by default legal.
Right. So, as long as we're talking about the central bank and the Supreme Court, we all bystanders were witnesses to the tussle between them. That RBI on one hand said that cryptocurrencies shouldn't be allowed, and the Supreme Court said it should be. At the same time, RBI at one point in time thought that while they cannot completely ban cryptos, but they could cut the supply to whatever is fueling cryptos by detaching it from the rest of the banking system. So I mean, that's quite a I'd say a move, without ascribing any adjective to it. It's quite a move to try and achieve your objectives. But the underlying point or the moot point is that regulators are not so much in favor. The central bank, the regulators, administration is not so much in favor of cryptocurrency right now. At least that's what the tone is. So apart from the fact that obviously no one wants to run a parallel economy, it comes along with a whole set of difficulties in administrating a nation and an economy. But apart from that, what are your thoughts on what's making these central banks and government agencies squirm in their chairs at the very mention of cryptocurrency? What's the problem? What are they not liking about it? And what's your perspective on it?
So it's a very, very good question and a very simple answer. If you look at the fact that every government is on the spectrum of whether they really dislike crypto or whether they really like crypto. So you can attribute every country, broadly speaking, on this spectrum. It's not unilaterally every country dislikes crypto. Let me just come out and say that. There are many countries where crypto is regulated, legal, encouraged to be owned. You can pay taxes in them. In fact, there are certain countries where you can it's the second legal tender. So it depends on which country you are that you would attribute the regulator to have a perspective on. But broadly speaking, any progressive banking jurisdiction, any open banking system, any customer-centric banking system has a positive outlook to cryptocurrencies, and any banking system which is working towards capital control, broadly speaking, does not like crypto because of the freedom that it brings to the customer. So think of what crypto really provides, right? It essentially decentralizes the control um, of currency. And who does that stand to benefit? The people who it's decentralized to, and and very simply put, if let's say they are being empowered, who is being where is that shift of dynamic coming from? It's coming from the centralized regulator. So I mean, certain people support a thriving next wave of innovation, and certain people like to hold on to the past. We think cryptos is way past it being controlled. It's been here for 12 years. There've been bans or attempts of certain countries making it illegal. But what that has just shown is it completely switches to the gray market, as you can imagine. It only weeds out the firms with the good intentions, and as long as there's underlying demand, there will be supply.
Right, right. Darshan, there's just a small follow-on this. So there are talks around. So there are perspectives around this very theory of controlled capital, wherein there are a set of people who feel that a controlled capital ecosystem is in fact necessary to maintain the stability and the growth prospects of the economy, saying that if it becomes as free floating as the decentralized systems are trying to make it, then it makes the economy all the more vulnerable to be let's say, to be attacked by more powerful forces within pockets of the economy. It makes it vulnerable to the hands of the more powerful, and the capitalists win over the win this entire system, and then they sort of decide everything that happens. So then power gets controlled by a handful few, and the handful few are not the chosen ones. They are the ones who are self-styled, and by their power of wealth they decide to run the economy. So what are your thoughts on this perspective of controlled capital?
Uh, Power has always historically rested in the few. At the moment, it's with banking regulators. I would rather have it skewed towards the people. Uh, but broadly speaking, uh, the argument for the pros of capital control make sense without context. But if you're trying to, let's say, drive foreign direct investment, and you're trying to drive venture capital growth for innovative founders, and in turn having technology built in this country, uh, free of flowing capital markets have proven to significantly outperform restrictive capital controls. Let's say you're making an investment and you're not able to get that out over a 5 or 7 year horizon. It's not a very attractive place to make an investment in the first place.
Hmm.
Secondly, the argument that you lose certain drivers of the economy does make sense, but these drivers, in my perspective, should have never existed in the first place, because what that effectively does is puts the entire economy's control in the hands of a few bureaucrats, and I don't think they really know what they're doing, to be completely honest. Because if they did, 50% of them wouldn't have had their economy cross 15% annualized inflation in the last 40 years. 25% of them, which is 50 countries in the world, have crossed 15% inflation in a 12-month timeline in the last 25 years. So this system is 100 years old. Money has existed way before that in a non-corruptible manner through being precious metal denominated that was more stable. And the downside of having a few people control, that too they are non-elected. Let me just make that explicit. A few people control the way money works in a country is a breakdown of incentives more than anything else. If better than adding restrictions, and all we have to do is design an incentive system that works better and not give control to a few people.
Wow, what a perspective! What a perspective! So, while there's a whole lot more, that has intrigued me, but I have to, now as long as we are on the conversation around cryptos and regulators, India is officiating its first set of rules around cryptocurrencies, right? As we speak, it was supposed to be tabled in the monsoon session of the parliament, but it got pushed ahead. But we are pretty much in advanced stages. At least that's what the general sense is, that we are going to come out with our first set of rules for cryptocurrencies. So what are you looking forward to? What are you hopeful about, and what are the things that you are crossing your fingers on, that yaar ye to hona hi chahiye, ya I really really hope this is not the route that they take. So what are your thoughts around these first set of rules that are yet to come?
Yeah, so you're absolutely right. There was a bill proposed earlier this year. It wasn't tabled. I think it's in a near final form, but is not open to public scrutiny, which is interesting. Um, I think if I were to be optimistic, I would say it would regulate cryptocurrencies as an asset class and tax the space, which is very beneficial for the Indian economy, while ensuring that the Indian investor gets the potential upside of this new asset class that people don't really understand or know what the ceiling is. The downside is well understood. I don't think the upside is. The upside could be very, very large, and I think it's just a tremendous lost opportunity if Indian investors can't gain that upside. Um, so best case scenario is that it's regulated as an asset and it's taxed. And I'm sure every platform, including ours, would be very happy to have an exportable. What is your tax liability? Sort of a dashboard where people can ensure that they're paying their fair share of taxes. I think that's the best case scenario. The worst case scenario is if, let's say, the government decide that the cons outweigh the pros of having Indian citizens own crypto or Indian residents own crypto, which would mean every regulated platform would need to offer the opportunity for the Indian investor to exit cryptocurrencies. So there will be some timeline where that is given, and then post which these platforms would need to close down. Which I hope does not happen because, of course, I'm one of these platforms. But broadly speaking, we're international, so a small part of our market is India. But I think more than that, it's a lose. It's a lose for the Indian customer, the Indian investor, because okay, Bitcoin's at what, 40, $50,000 right now. Does anybody know what the ceiling is? Does anybody know what the ceiling of Ethereum is? The amount of innovation in the DeFi space over a monthly basis is at least 2 to 3 times the innovation of the traditional financial world. So all of that accumulation of intellectual property, all of those salaries that could be earned by Indian customers, all of that upside just for the investor is being completely lost. The second lose is, of course, the tax authorities in India, where if you're banning these platforms, you're essentially pushing that demand to be fulfilled in the broader gray market. That's what happens with every banned substance. Okay, that's not going to be unique to crypto. Pick the last 250 years, anything anybody's tried to ban basically goes to the gray market, and just tremendous loss of revenue, tremendous scope of fraudulent transactions. It's not a win for the regulator. And the third is, of course, the loss to entrepreneurs who are passionate about the space, who want to create value, who want to be a part of the next wave of money, and don't get to participate. The developers don't get to participate. The business development people, the marketing people don't get to participate. So it's very unfair if that's the case. If that's what ends up happening.
Right. So this begs the next set of questions. Okay, two questions to be specific. I'll go on with the first one. Um, the central bank itself has been talking about launching a CBDC, which is basically a central bank digital currency sort of a thing. So they're like, we are not going to allow cryptocurrencies, and if cryptocurrencies have to be allowed, we need to own it, right? So. While superficially it is, completely contradictory to their stated objectives, the jury is still out on deciding how efficient this would be or not. But what's your perspective? If the central bank starts launching its own set of digital currencies, will it solve will it defeat or will it simply circumvent the purpose of cryptocurrencies?
It, I think CBDCs are completely independent to cryptocurrencies. The argument that it is a substitute to crypto is not valid at all, and let me tell you why. The whole point of cryptocurrencies is to be a hedge against monetary and fiscal policy. It's to be an independent source of value. If let's say it's with a new layer, think of it as a new set of clothes, but the same. It's more of the same. Or think of it as a fresh set of paint on your old car. Does not make your car new. Um, in fact, it does more good than bad because it removes uh, control of the companies as that have existed. Now, let's say, let me give you an example of what's happening in China to make more sense of my last point. What
Hmm.
China is doing is they're digitizing their yuan, and they're at the same time aggressively regulating fintechs. Because the fintechs have taken over many touch points of what traditional banks used to do. And we're seeing that in India happen too. So peer-to-peer payments was driven through wallets, and then the government came in and did the whole mandating UPI, which is great for the customer, very good for NPCI, who's by the way a phenomenal organization, um, and reasonably okay for the regulator. What this would do is, if let's say they control the entire database, it would completely eliminate the need for intermediaries such as banks and or fintech companies to play any part of the monetary system, which means they're dialing the dial in the complete opposite direction of privatization, and we're going back to I mean, money is your IOU for value that you've created, right, in the world. So they have complete control over that. At least if it was cash, you can hide it under your bed and you can do something. If let's say the government deems your activity not to their liking, you can hold on to your cash, right? It's yours because you made it. You of course declared it and whatnot, but like everything is reversible, everything is monitorable, everything is controlled by one regulator, and that kind of disassociation of incentives has famously been disastrous.
Understood. Understood. So at the same time, the second question that I'm talking about. So the first one was obviously a regulator centric one. The second one is going to be more Indian people centric one. So how should a common man view a cryptocurrency at all? At the start of the conversation, I've been calling it a currency, and at the same time we have been appreciating the potential it has as an asset. So, what should one view it as? An asset class, a currency, a commodity, or simply a speculative instrument? In your head, apart from what the technical classification is, how should one treat it while trying to transact into it?
So cryptocurrencies in today's shape and form mostly behave as an asset class with very high volatility. Um, it's not used as an instrument of settlement in India because that comes under the regulator's purview. And they very explicitly said that the only legal tender in India is Indian rupees, which is fair game, right? I mean, they have very good reasons for that to be mandated, and all respect to the work that they do, which clearly tells you that, okay, you can't use it for peer-to-peer settlement, which means it's going to behave for the foreseeable future, at least in India, as an asset class. Outside India, thankfully, the asset regulators have not been extended to crypto. It's actually been the payment regulators that cover crypto. Just as an example, the Payment Service Act in Singapore now covers cryptocurrencies, just like how it covers major payment institutions. So think of your payments bank and your wallet companies in India. That equivalent in Singapore is comes under the Payment Service Act. Crypto is also now regulated under the Payment Service Act. Similarly, the FCA, which is the financial regulator there, regulates it like a money transmitting instrument. So does the US. So most regulators are looking at it as an instrument of settlement because they're seeing heavy peer-to-peer settlement behavior because it's just a really efficient way to do so. But for all intents and purposes, in India, you're supposed to be using it as an upside instrument. So buy it if you think you're bullish on the asset class and gain its profit if it goes up or the downside if it goes down. Now, when the customer is to evaluate this as an asset class, because that's how it is classified in India, or it is likely to be classified in India, um, you you have to look at how each person allocates their broader investable capital. And we recommend anywhere between 2 to 5% of the person's investable capital to be in crypto. Now, typically, the advice that you'd get is split that among stock, equity, debt, and maybe a very small sliver on risky instruments that may have a huge upside. I can't think of an asset class that has a more higher upside than crypto. So treat it as probably the most risky investment that you're going to make, or at least the most volatile investment that you're going to make. And but also allocate a small portion of your exposure to it, because if it becomes huge, you like it can become really huge. That 5% or that 2% can be worth far more than your entire 95 to 98% if it really works, right? So the upside opportunity itself warrants very small exposure at the very least.
Right, right. So while we're talking about Indians trying to allocate some bet to cryptocurrencies, it begs the very next question, which is what cryptocurrency? So the number of cryptocurrencies that are out there, it is almost as if every cryptocurrency story starts with a line, an opening like once upon a time there were two engineers and a line of code, and hence gave birth to a coin, sort of a situation wherein the entire crypto ecosystem is flooded with a number of options. People are torn between placed across the spectrum, starting from very serious crypto investors to meme investors, right? So we all know about the Dogecoin, and people are talking about cryptocurrencies being a joke, almost a joke, when a single tweet by someone like Elon Musk sends it either skyrocketing or down the valley. That just lends a very comedic sort of an undertone to the world of cryptocurrencies. So while most of us, and you at Vault also, are trying to build a serious ecosystem wherein crypto can occupy some serious space in the mainstream monetary system, there are a set of happenings, and lending it a very comedic angle. So how does one even choose the right cryptocurrency, right? So right from the most, perhaps the most stable, relatively stable bitcoins and ethers, to perhaps the latest Shiba Inus, an investor is spoiled for choices when it comes to choosing a cryptocurrency. So how does one choose what should one go for?
Disclaimer: this is not financial advice. Need to make
No,
that explicit.
absolutely not.
This is just my very personal opinion. Please invest at your own risk. The way we look at cryptocurrencies is we put them in a few baskets. Now, some cryptocurrencies are truly decentralized and are trying to achieve one thing in particular. Bitcoin is trying to disrupt the monetary and fiscal system. That is essentially what it's trying to do. Ethereum is trying to build a distributed network of compute. And then there are other tokens that perform each thing in a very unique manner. They exist for a reason. There are certain projects out there that exist for the sole reasons of funding an early stage venture. That is startup capital, right? And issuing a token is one of the few instruments that a crypto firm has to raise capital. So unfortunately, more often than not, you're backing. If you come across a random token, it's likely providing seed capital uh, to an early stage project. So it is very risky, and these are typically known as ICOs. Now they're also certain based on how the token is launched. They're also called IEOs, which is offered on an exchange, very similar to a public offering, except on a crypto exchange. Um, they are ways to fund the early project. If you're not already a startup investor and you don't, let's say, have the means to do due diligence on these individual projects, especially because they're all pre-launch, you should probably stay away from that. Um, but I want to address a more broader tone to this question, and this is which is influencers have the capability to move markets. Now, Elon Musk is the most followed person on Twitter, I think. Uh, he has the capability to influence anything. If you may remember, he tweets about Tesla stock, and immediately after a tweet, it moves. He not sure whether you know, but one of the Kardashians tweeted about the fact that she doesn't use Snapchat, and I think it crashed 20%. So any instrument that is very widely invested upon, and any influencer that significantly has clout within their community, has the potential to move markets, right? Is that illegal? Depending on whether it was intentionally structured to move a market in a particular way, and whether there was personal gain. Now, this applies to securities laws, which is why Elon is not really allowed to tweet potentially price moving tweets about Tesla at least anymore. That
Right.
does The securities laws don't apply for crypto, but I don't think that sentiment should be broadly extended to crypto, because uh, just go back to his tweets and correlate it to anything he talks about, you'll see a huge spike. And also, um it's in its infancy. So, I mean, it's 12 years old. I don't remember the last thing that was 12 years old that is worth $2 trillion plus. So, cut it some slack.
Absolutely, absolutely. I completely get your point and appreciate where you're coming from. So, while we are talking about cryptocurrencies and ICOs, I must ask this question in all seriousness. Does Vault ever intend to launch its own crypto, go the ICO route, IEO route, or have a cryptocurrency that it controls?
So, our mission is to accelerate the transition to decentralized money. We think it's the most customer centric form of money that's ever existed. And we want more people to own crypto. We want more people to build wealth in crypto. We think it's a phenomenal instrument to build your wealth in. At least historical data shows that. And we think it has many pros, which is why we're passionate about delivering a banking experience, essentially. Do many touch points of what a bank does today, or what you've come to expect a fintech or a bank to do, natively on the blockchain. For that to happen, we need to have the old money, which is everything that we have come to use today, work with the new, which is everything we will use very soon. And for that, we have to be regulated. For that, we have to be well capitalized. And for that, we have to be exceptionally customer centric, if this is to be large. And for all of that to happen, a token has more cons than pros. Now, a token is a phenomenal way to raise capital, but we've seen if we create value, the traditional ways of raising capital works pretty well, which is, I think, a testament to our fundraising capability as well. We did raise a $25 million round. Before that, we'd raised a VC round. So, okay, it is a good instrument to raise capital, but not so much for us because we have access to venture capital money too. So, what else could it do? Do we need a token because we have more touch points of decentralization or governance? Not really, because we're a centralized platform, and we're also to be regulated, which means we have to follow the law of the land. A token doesn't drive that behavior. So we're not at this point or anytime down the road evaluating a token. It doesn't align with our mission and our goals.
Right. So, talking about your missions
We think
and
if you are ever to own a token, yeah, just one sec. If you are ever to
yeah.
own a token, try Bitcoin out. It's phenomenal.
Absolutely. So no, while talking about your vision and the alignment at at what Vault is trying to achieve, I just some elementary research about Vault also will yell that you're trying to completely revolutionize the traditional monetary system, right? And there is one particularly very interesting thing that one will come across is this entire lend FD sort of a replacement, wherein the world is trying to propose an FD replacement, but in the form of cryptocurrency FDs. So would you like to throw some light upon that? That how does it work? How does a normal investor do it? What are the caps, the risks? Just generally, it's intriguing.
Yeah, we're not trying to disrupt the monetary system by ourselves. We think crypto is going to do that. We want to accelerate the transition to crypto. We want to play a small part in enabling the cryptocurrency world to disrupt the monetary and fiscal system that exists. To that end, most people use a bank for three fundamental reasons. One is a safe storage of money that's done through your bank accounts. Alternatively, in fintechs, is done through your wallet. The next is an easy and instantaneous way to pay for things. That is done through a debit card, a credit card in the developed world, and also towards the premium end of the banking world, as well as UPI, which is a more widely accepted way to settle transactions instantly. And the third is, if let's say people are not using their capital, it needs to enter some system of credit. Now, on one end, that credit tends to be a savings account plus fixed deposit option that a bank delivers. And on the other is the capability for you to get a loan in case you need a line of credit for some reason. Now, when we looked at what the decentralized blockchain or decentralized crypto world did, is that it solved for one and two on the blockchain itself. So just like how your Paytm wallet and your bank account exists, you have a Bitcoin wallet, you have an Ethereum wallet. So storage is solved for on the network. Next, and what one of the two things that is truly unique to the crypto world is it's a decentralized way to settle transactions. Before crypto existed, if you wanted to settle transactions, you would have to make a bank-to-bank transfer or a card transfer. Um, and then Paytm and some other wallets came in, so you could settle on these private companies' databases, and you also have the capability to withdraw to your bank. Well, now we have a distributed network that does this, so no intermediaries, and you can make these transactions in a truly irreversible and non-interferable manner. So payments was also solved for. Now there was no system of credit, which is why we started by on one end offering yield, and on the other end offering a line of credit. Yield that people understand really well is in the form of a savings account and a fixed deposit. So we just did that. All crypto wallets on Vault are a savings account wallet, which is truly unique to us. We're the only platform in the world that does that. So you don't have to opt in for interest. It's automatically paid out to you. Along with so you don't have to trade off also between trading and earning yield. You get to do both. Uh, and you have the optionality of optimizing for yield for if you're okay committing your capital for a relatively short time, so 1 month or more, and you earn phenomenally high yields through the fixed deposit.
Right, right. Quite interesting developments there. I'm sure most of our viewers are going to go and check out what's it all about. So, as we move towards the fag end of this conversation, Darshan, the conversation would be incomplete if I were to not seek your commentary on NFTs. So, the first time I came across the term non-fungible tokens, I'm a mainstream asset management guy. I keep an eye on cryptos, but not as actively. So the first time I came across NFTs was on a Reddit thread. All right, perhaps not the most official channel, and it had once again a very comical background about how something absolutely worthless can be converted to something worth millions of dollars just if you give it a fancy smashy name like an NFT. So that's I'm sure there are many like me who are thinking about what NFTs are, and is it a really valuable innovation, or is it an innovation at all? So what are your perspectives on what is an NFT and what purpose is it solving at all?
So an NFT is a phenomenal way to digitally uh, represent ownership of a physical good that is unique, or have or prove ownership of a truly digital good in itself.
Hmm.
It is an innovation. There's no question about it, in my perspective. Um, which, but the way to value it is all the question, right? Is it a good investment opportunity or no? But let me just maybe tell you what the NFT ecosystem where pockets of value is created in the NFT ecosystem, and then you can draw your own conclusion. Um, NFTs are a phenomenal way to sell art online. It the art market exists and it's very large. The collectibles market exists and is very large. Why shouldn't there be a digital equivalent of that? And in fact, a digital equivalent of the same adds so many touch points of convenience, but eliminates, the feel, the real world feel factor of it. But I think we're getting over the whole real field thing, and we're getting used to the digital ownership, broadly speaking. Anyway, um, NFTs have done a huge favor for crypto, to be completely honest, because it's brought a new wave of customers to own crypto. Like every artist I know has looked at NFTs, and the only way to, or at least the way that the current NFT market works, is that you get paid in Ethereum. So you create art and you get paid in crypto. It's truly decentralized again. OpenSea and any other NFT platform, depending on the platform, they could be centralized or decentralized, but can be driven in a completely decentralized manner too. So the next wave of customers who are not the finance bugs like you or me, for example, who don't read theories on Reddit, who don't research maybe monetary systems over the last 250 years. People care about art. People care about creativity, right? Uh, it's led to a fundamentally new wave of customers to come into crypto. So broader crypto platforms are very grateful for NFTs. I can't tell which ones to buy and which not. I don't think I have an appreciation for, broadly speaking, art the way many people do. So I'm not the best person to get advice on whether one should buy one NFT versus another. But I think uh, this market's going nowhere. If you look at even the Ethereum congestion and where transactions are happening on the blockchain, the most crowded, broadly speaking, contract on the Ethereum network, which means the platform that's consuming the most compute on the network, by a factor of 4 is OpenSea, which is an NFT marketplace, which means people are not exchanging the exchange platforms are doing lesser volume than the NFT platforms. So does that mean it's highly speculative? Probably. Right now, that's what I'm telling you, right? I can't tell you whether it's large. It makes sense to buy or not, but is it substantial? Like, there's no question of whether it's substantial or no. And I think over time, it's only going to become more mainstream. Every artist is going to have digital collectibles, be it a music creator. We're seeing that almost, I think more than 20% of the bands that I listen to have some version of NFTs. And I think football teams have their own fan tokens now. Why not? I mean, they have physical collectibles, right? They create one of ones, or they create 500 pieces of something limited. It's a phenomenal way to raise capital and for customers and individuals to get ownership into something they're passionate about.
Right, right. So what a conversation this was. I am completely I'm still processing half of the things that you spoke about. I'm running ahead of myself at this point. But like all good things, even this has come towards a close. I was really hopeful that we get to continue the conversation for the broader audience. But no problems. Perhaps we will have another time for another topic. But for today, I feel, Darshan, you have thrown significant light and color on all things crypto and all things related to cryptocurrencies. So thanks a lot, Darshan, for your time, and your insights. Very obviously are more than valuable. And I'm pretty confident it has helped most of our viewers at least as much as it has helped me, and it has helped me a lot. Just by the way, so Darshan, thanks a lot for your time.
Thank you.
So, yep, see you around. So,
Thanks, everyone.
so guys, this was Darshan Bathija, the co-founder and CEO of Vauld. Vauld is trying to do a fantastic job when it comes to, cryptocurrencies and being a cryptocurrency exchange and offering certain crypto-related services, which could, sort of ring a bell with most traditional services, but with a modern crypto twist to it. So, the last time we received a lot many requests that, at the Fisdom Wealthcast, we have been covering just too many mainstream assets. We have been doing a great job on, all things economy, equity, debt, capital markets, global investing. But there was one missing piece, that was cryptocurrencies. And we took it onto ourselves to bring out, get the best of the best and share their thoughts with you on a really dynamic and developing concept of cryptocurrencies. I hope it helped each one of you. So very soon we'll be out with yet another episode of the Fisdom Wealthcast with an extremely interesting guest. But before that, next week Friday, we are going to be having a Fisdom Wealth Space again. It will be hosted by yours truly, but on Twitter Spaces. So we'll be having an extremely interesting guest, an extremely interesting topic, and it is an audio only format, so you can continue listening to it while you're going about with your routines. So log into Twitter, follow our Twitter handle. It's at the Rate Fisdom app. Follow us on LinkedIn, Instagram, Facebook as well. You will receive the emailers. Subscribe to the YouTube channel as well. Share this video with your friends. So there's a whole lot more in store for you guys. Just like you did for cryptocurrencies, please keep writing to us. We are reachable at research@fisdom.com. Write to us, share your ideas. Whom would you like to see on the show? What topics would you like us to address? Feedback, suggestion, all of it welcome. So I'll be back really soon. The next week on Twitter Spaces, and the week after, perhaps with another episode of the Fisdom Wealthcast. So meanwhile, happy investing, guys. See you really, really soon. Don't forget to like, share, and subscribe this video. It really helps us stay motivated and keep getting great content to you. So happy investing, guys. Have a great weekend. See ya.